Ben, we'll see you in the stream today.
Yeah.
All right,
Thank you
later,
for inviting
JD.
me. Later.
Cheers.
So I'm sharing my screen. I don't know
Okay, cool.
if you guys
Let me pull your screen up. There we go.
But this is the short that I caught earlier today. A lot of people were in because I was also streaming this as well. A lot of people were anticipating, oh, you're going to add your positions here. I was actually looking at this breaker block for my positions. That's where I actually entered in, as you can see with my arrow there. And then I was anticipating that we were going to go to the Tuesday low. So I left a one contract, but that I just closed when it went up here.
Okay.
But I still cashed out quite a bit. This is 3.8 RR here. It was a little bit more of a high risk with the stop loss just right above the breaker, but I entered in. I almost got stopped out here, but it bodied down lower with a beautiful reaction. And this is actually it was right here, and here are the two cleanest reactions I've seen in a long time. But I think we're just going to melt down to sell side.
I think you're right now, especially like the way if you paint off that 5-minute fair value gap that we tapped into, like we consolidated in there. But yeah, I think we're moving over to sell side now. It looks pretty clean.
Yeah.
So what would you say your average R multiple is? Do you have like a set system for the way you do it, or are you like a high risk reward guy, lower win rates? What would you say your method is for that?
So I'm a firm believer. This is how I made about 31 grand in 3 weeks is one trade a day. You get in and you get out. And
I was telling them just before you've withdrawn like 70K in a pretty short period, right?
From Topstep. About 71K in 7 months. And that was in the span from my first payout, right? My first ever payout in my whole life was in June of 2024. And then ever since then, I just 10K a month. It was more like 5K a month than I had a 30K month. And it was a little more inconsistent than that. But it just all lifted off as soon as I just found my one edge. And that one edge is time, then price. I had everything figured out and it wasn't working. And I was like, why? And then I looked deeper and it's like every single time my setup forms, it's during a macro.
Dude,
and I just followed that.
I go back and forth on macros, man. Like it's not that I don't like using them, but I just sometimes forget to emphasize them as much as I should. But whether they actually work algorithmically or not, like, I'm not here to say that, but just the simple fact that you can give yourself certain time windows to look for trades and then not touch anything unless we are in that specified time window just helps a lot. Do you agree? What's your favorite macro time? And guys, actually, I do want to tell the chat because a lot of people, if you're on ASFX TV, you might not know macro windows because I'm the only ICT trader here. So I'm a bit of a black sheep. So macro windows are specific time windows throughout the New York session where there is increased volatility and ways to find higher probability setups.
Yeah. So macro times is every first 10 minutes and last 10 minutes of every single hour of the day. Best macros are during obviously the New York AM session. That's what I find. It's times in the day where volatility is injected. And you can anticipate either some form of manipulation. And what I mean by some form of manipulation, this 3 minute, which is actually, where was it? The 9:50 exactly. So the first minute of the macro is when the 3 minute candle filled into this fair value gap right down here. So the first minute of the macro, that little wick is a little bit of manipulation that happened on the first minute. That a little bit of volatility injected in the markets, wicked up, took lower time frame highs, traded into an internal range liquidity, which is what SIBIs and BISIs are, and then moved lower. So this little act of manipulation here is common to happen during a macro. So when you identify that that's happening and then you look on your time, you're like, oh, this is in my window. Take that trade and it's going to drive down. And then also because the macro lasts for 20 minutes, you're going to see more volatility in the delivery of your price action. As you can see, during this macro, we had a lot more delivery than versus over here. It's a little bit less.
Exactly. So this is actually a question I think that I would actually want to know myself because again, I haven't studied deeply on macros. Like I use them kind of loosely, but would you say that within that 20-minute period, inside that window, do you want to see the entire move play out within the 20 minutes, or is it more about seeing the setup form within that 20-minute window?
It's the setup form and the setup start to deliver. If your setup, if you entered into your setup at like 9:55 and you're still in your break even at 10:10, odds are your setup is not the area price is going to react off of, and it's going to reach for a different level of price action before switching. So it's not really like get out of your trade, but if you don't see your trade start to move in your direction by the end of your macro, if you're still confident in your trade and your bias, you can wait for the extended macro, which is an extra 5 minutes. But you ideally would want to get out or cut your positions. But macros are. Go ahead.
No, I think that's a good way of analyzing it, and a good way to possibly get yourself out of a bad trade. Or if like, I don't know, are you someone that moves stops to break even? Do you do that?
Depending on price, not on money. So if my trade is 3 RR in, but there's still a valid reason for price to go back out to my break even, I'm not going to drag it to break even. If there is a protected high, if I'm in a short and there's a protected high that formed, I'm going to drag my stop loss there instead of break even, just for the sole purpose of I've been stopped out too many times on premature dragging my stop loss and missing out on so much money. You want to detach from the money aspect of trading and adapt to actually reading the markets and figuring out where price should not go if your trade's going to win.
100%. So would you say that you have a specific model within the framework of ICT, or are you more discretionary in how you use the concepts and it's kind of like whatever fits in the context of that setup?
So I actually learned this from a great trader. I don't know if you guys know this, but his name is Jade Cap. I used to talk to him. We had some live calls, me and him one-on-one. I'm not going to say too much, but he taught me about a different models for different daily profiles. And this is something ICT teaches, and this is something you unlock deeper when you get into the bottom of the iceberg and you really dive deep into trading. You figure out what types of models work best with what type of daily profiles. And my main model is I wait for 9:30 to manipulate, 9:50 to form the entry, and then 10 a.m. to deliver me. Mm-hmm. Everything is time-based first. Market structure shift, breaker structure, breaker, institutional order flow entry drill, which is where it's in low resistance liquidity run, and it just quickly trades into a fair value gap, then moves back up higher. I have a lot of models, but they all fit for specific profiles. I make them adapt to what the market is giving me. I don't try to sit on my chair, get on my computer, and grab the profits out of the markets. I wait for the market to lend me its hand and say, here's the cash, enter into your position.
100%, man. Another way, it's a little bit different, but just another example of how I've been kind of getting myself to let the market come to me and not try to grab or force profits out is simply getting in with limit orders on my entries. I used to be a market entry guy. Like, I would always enter in at the market. And lately, the last few months, I only get in at limit. So if it doesn't hit the price I want, I'm just not going to get into the trade. Yeah, I might miss like 20% of my setups, but the majority of the time, you're not going to get that perfect entry with a market order anyway. Like, the market's going to come back, and you can get yourself a better fill by just being a little patient. And I think just like the context of it I'm not forcing my will onto the market right then and there and getting caught up chasing price. You know what I mean?
Yeah, no, totally. And one thing about waiting for precision, like precision brings an average trader that gets a few payouts every quarter to like, 100K month scalability. Like, precision is not needed to be profitable, but it's needed to make money. And that's why, like, a lot of people use limit orders. I like to not use limit orders just for the sole purpose of I like to wait for the candle to close.
No, it's fair. So you get in at market orders on candle closures.
Not always. Like, if there's 5 seconds until the candle and I see it's starting to trade lower, I'll get in. Right.
Yeah.
But a lot of the times price will just trade. Oh, cool reaction. Start to go lower and then boom, rip up right above. And I lose in less than 30 seconds.
It's definitely one of the issues for me with limit orders. But just overall, more times than not, it just helps me kind of like not necessarily bottom tick the perfect price, but I just know that more times than not, whenever I get in on a move, it usually moves 10 to 15 ticks against me quick. And then even if I'm right, continue. So it's just helped me get a better average fill, and it's proven to be helpful. But I definitely understand what you're saying.
Yeah. And I just wanted to point one thing out that I see in the markets. I could be
Yeah,
wrong here. Obviously, I can't predict the exact market right now, but you can see price is reacting to this little fair value gap here, and it's like, oh, it's gonna continue to push price down. It's respecting consequent encroachment. But look at the candles; they're not displacing; they're slow.
Yes.
And what is resting right above this high on the 3-minute? This easy fair value gap, which is a form of buy side liquidity. It's an internal range liquidity. So
Exactly.
I'm anticipating price is going to wick up above this buy side, this high, trade into the inefficiency. Then if we are going to trade lower, trade lower. But again, I could be wrong. We could completely rip down lower, but I just think that this little bubble price action is not safe.
Yep. This is my favorite way to trade like a continuation setup, is waiting for a sweep of an internal high into a fair value gap. Like it's so simple, but helps so much, because there's people right now trailing their stop, and they got their stop right above that little 1 minute swing low.
Yep.
Or swing
I
high.
even was thinking about it, like after this reaction was right here, I was like, oh, I would totally do my stop here once we trade below here. But then when I see the candle slow down, I was like, I'm not doing that. So there's so many orders here that price is going to take out, unless the markets are, being a little giving today and they just rip it lower. But I wouldn't
also,
feel safe here.
Yeah, and also this is what I love about ICT, is it gives me a narrative for where I think price is going to next. Like obviously, we both think it's probably higher probability that we're coming for that sell side liquidity down at the those 10 a.m. lows, right? I'm guessing that's the draw to me at the moment.
Mm-hmm. That is a very clean low, like exactly at 10 a.m., not being able to touch it. I mean, I haven't actually checked the regular trading hour gap today at all.
I think we
But
do have a gap.
Yeah. Well, this is Tuesday. Damn. I don't think we have a gap. What time frame am I on? I'm on the 1 minute. I don't see a gap. Is it my trading view that's messed up? It might be.
No, I use electronic hours. So I heard Evan though.
Oh, here it is.
Yeah, I think there's a small one, right?
No, this is Wednesday.
Oh, so maybe there's not a gap today. But this is the thing, bro. Like based off the 4-hour time frame where we are, we're stuck in one of the grossest 4-hour ranges I've seen in a while. Like,
oh yeah.
One of the problems, and we were talking about this yesterday when we were just chatting for a minute. Like, there's a ton of like equal highs and equal lows that are just getting left that you think is going to get hit, and it just doesn't. So maybe we do like bounce at the lows of this range again and continue this range. But I feel like the most logical conclusion is for us to go and take that 10 a.m. low right now.
Yeah, no. And with this 5-minute setup forming, like the consolidation, expansion, retracement, expansion, right down to deliver to that low. It's kind of for me, it's too easy to see. But again, a lot of the times when the market makes an obvious setup, it just does the complete opposite. We have an order block here, a fair value gap, internal range high. Like the stars are aligning right now with this fair value gap. The only thing is it going to fill it, or is it just going to rip down lower?
100%. And again, the other good thing about using that 5-minute gap is, I mean, if we invert the gap, then we can kind of at least throw shorts off the table for the short term, right? And wait for us to maybe break back below it. But as of right now, I mean, I'm going to have to stick to that short bias and ultimately look for that 10 a.m. low as the bearish objective.
Mm-hmm. We still got this 15-minute to deliver, right? Crazy wick price action, but the bodies tell the story.
Exactly.
And it looks like it wants to respect it.
That's the other thing. Waiting for candle closures could help you so much, especially with fair value gaps. Because, I mean, to be honest, I got kind of induced into that long because I was looking at that 5-minute SIBI that we were in just before, seeing that we were breaking above, but I didn't wait for the candle closure. And what did we do? We wicked through it and we never inverted it though.
Yeah. Yeah. And with the short that I took previously, I think it was right here, you can see that we We took out all these lows, and I was anticipating to leave a runner all the way to the low of the range. But then when I saw this, I
Yep.
knew that we're
Yep.
not going down there. So I
Yep.
closed. I waited 1 minute too long, and I had to close like around here. But I closed, and all my
So
my last runner.
explain why you knew, because when I saw that price action as well, I said, okay, we're not just going to keep delivering downside yet. We're going to have a pullback here. Explain why.
A lot of people say bodies tell the stories, but after draws on liquidity, wicks tell the story. And if you're taking price, if this took liquidity at the 950 macro, which is an ejection of liquidity, right? During that macro, we took a form of liquidity and then reversed. We slowed down. This is what indicates a reversal. Is if you're going to take a bunch of equal lows and not continue to rip down during such a good injection of volatility, it's going to reverse on you. And
100%.
a lot of people were telling me as I closed the trade, why'd you close? It's just rebalancing. I was like, no, it's not, because it's not supposed to rebalance right now. If it was going to deliver lower, it was going to do it at 10 a.m. Why did it look like that?
So I had a Moss on stream. His handle is Sten FP or something like that. You might know him. He's a great ICT trader as well. He trades a bit differently from us because he's very focused. I think he has like a negative risk reward, but very high win rate. But he was talking about fair value gaps, and he was talking about how what a fair value gap is representing is essentially market orders, and market orders are what actually moves the market, right? Not limit or stop orders, because those are passive orders. Market orders are aggressive buying and selling, which moves the market. And all a fair value gap is, at least the way we interpret it, is it's showing displacement and aggressive buying or selling. So if we look, and same thing with old highs and lows, right? So if we take liquidity, what's happening there? It's targeting buy stops and sell stops and triggering them. So if we're going to take liquidity, we're going to do one of two things. We should either continue to slam lower, or if we start pulling back right after we take liquidity, then you can anticipate like a pullback, which is what happened on that leg that moved up.
Yeah, and fair value gaps prior to draw on liquidity, those beautiful. I love to trade them. Fair value gaps after your draw on liquidity is like you said, it's a bunch of short people going in short. What are they going to do after taking main form of liquidity? They're not going to trade into your fair value gap, offer you even more positions to pyramid, and then move down. They're going to kill out all the shorts. And even if the bias is still bearish on the day, they're going to kill out all the shorts it produced to then drive price down lower. Because we're not with them. The markets are not on our side. They know when people are adding in most positions. When do people add in most positions? When price is rapidly moving lower. They're chasing their losses. They're adding in. They're just chasing. So they're going to deliver for the smart money. They're going to close their position here. Then the stupid money is going to add their positions in the fair value gaps and drag their stop loss from existing positions and stay in here and not take their profit here. And they're going to get wiped out, and then they're going to continue to move down lower again.
Exactly. 100%. And that's where the inversion model comes in too, right? If you take liquidity and then invert a bearish fair value gap to the upside, that's exactly the same thing that's happening, and why the inversion model is a really powerful entry technique, because you're giving yourself confirmation, waiting for that candle closure above a long example, a closure above a bearish fair value gap.
Yep. Dude, I love it. I love inversions. Inversions are great. I don't trade them as much, but because they just don't really form during my ideal time of my model, but they are great. Also, I want to point out that we could potentially, what I'm seeing in the future here is if we don't just rip lower, which it looks like we might be doing, consolidation, manipulation, distribution, power of three.
Yeah, we just swept that internal high and then drove lower and took those relative equal lows, just all from like a 1 minute time frame perspective.
Yeah, so it didn't trade into the 5 minute fair value gap, but what it did do is actually take a form of liquidity. So it doesn't need to go back up to that fair value gap now, because it formed a high and then broke that high, right? If price was going to move lower here, this needed to take this. But because this took this, we don't really need to go back up here again.
Yep.
You can see
And
price
again, like what are a lot of people doing right there? If you go back to the 1 minute chart real quick, a lot of people who really want to go long for some reason are seeing that as who are too zoomed in, are looking at that as like a 1 minute market structure shift, right? Whether they're ICT or not, they're seeing the market puts in a high, then it puts in a higher low and a higher high. But really, we couldn't even get a candle closure above it, right? So we take that and slam lower and then take the lows.
Too many people get caught up on entries. Entries is 20% of trading. Literally, you don't need an entry to be profitable. Fucking mic drop. You don't need an entry to be profitable.
Dude, I say this constantly, man. So many people, also people who like, put out trading courses, not just ICT stuff. Especially when you're a beginner trader. I mean, it makes sense. You think like, I just need a good entry signal. Just follow an entry signal blindly and it'll work. But it's just not the truth. For me, it's all about drawing liquidity first, right? Where do I think the market is going? What's the narrative? And then there are a million different ways to enter the market. You could find entries in 100 different contexts, but it's about where do you think it's going and why. I say this constantly.
Yeah. And a lot of people, they just jump in and start teaching people how to trade. And all they do is just show you a setup ICT taught years ago. That is not trading. Again, if you just enter into a trade at like the right time, you don't even need a setup and you will still be profitable. Setup is for precision. You don't need that. It's a setup is overrated. People worry way too much on their model when they forget the fact that trading is narrative. Trading is not your entry. It's where it's going, not when, right? You need to figure out where it's going, then when, then you get your entry for confirmation, then you get into your trade. You can't win. You can't be profitable if you're just taking every single entry. There's so many long entries in this price action. There's so many, but none of them work except for in this range because your narrative is bearish.
Exactly.
So you need to figure out why your why, and then it's your when, and then you enter.
Dude, that was one of like those light bulb moments for me when somebody, and it was like an SMC guy, which I know ICT, SMC are essentially the same thing.
Same thing.
But I learned this from someone who traded SMC, and it was just a light bulb moment for me where they talked about this. They were like, drawn liquidity, directional bias, however you want to call it, that is more important than your entry signal. And it made so much sense to me. Like if we go to here, I'm going to go to my chart real quick and give an example right here.
Do you need me to stop screen share?
I got you.
Oh no, you got it.
So, I mean, there's an example right here. So when we are this low after this drop right here, right? A lot of people, you could think like this is just way too low to get short. And while it was technically too low for me for a setup that I would like to trade, if we are anticipating, let's just use it from a 1 minute context, because I have been trading much lower time frames lately and scalping my moves. So we have this strong drop down. We have the displacement. We took out all these bullish fair value gaps. Then we start consolidating. And where we consolidate here, like we just talked about, we take this high. So we sweep out that high. We also created these relative equal lows right here. And this is, so getting short above this wick or into this move to take out these lows for a 1 minute scalp is a very coherent setup if we're using the context that the narrative is for us to come and take this swing low as our sell side, right? So even though we're very low in the move, and these are actually my favorite types of setups to take rather than the reversal up here or up here, although you can get much higher risk reward here, right? So you can get a lot bigger of an expansive move, but these setups, in my opinion, are higher probability because we know, like at this point, the market has showed its hand and the draw liquidity, we feel like we know where it is. Even this is probably a better example for the short, right? After we get this displacement move down, we have our retracement. We take some internal liquidity here and here. The market showed its hand, putting in a lower high to then get involved somewhere in here or in here, even though it's much lower. Like you didn't get the best entry up at the top, but you now had the narrative that we're probably coming for these lows or these lows. You know what I'm saying?
Yep. And if you just move over a little bit to the around 10:30, right now our direction is still moving off of that market structure shift fair value gap on the 1 minute. You're on the 5 minute? Do you mind going to
Yeah.
the 1 minute for me? And touching back to what you're saying, you can see that clean market structure shift fair value gap, right? The entry was at 10:30 exactly. There's time,
Right.
time then price. We're still moving and delivering from that setup. So like you were saying, these little entries inside a bigger entry is higher probability because you have more confirmation. We're still waiting for that entry to play out. There's so many other opportunities you can look for, even this low into the trade right close to the draw on liquidity, because if you use your fib on the higher time frame, yes, you're shorting in a discount. But then
Yes.
when you look even closer and really trade on the 1 minute, you're really scalping here. It's higher probability because you already have a confirmation. It's been confirmed for a long time that we're going down to those 10 a.m. lows. You just need to know, okay, when is the next manipulation going to happen on the 1 minute? Let me catch that.
Exactly. So the context that price action is fractal, right? So what happens on the daily happens on the 1 hour, happens on the 1 minute, but you can have the context of understanding, okay, we're in a discount. I'm shorting in a discount on a higher time frame. Yes. But if I have a 1 minute or a 5 minute time frame contextual setup, I get short around here, well, we've actually retraced back into premium of this price leg. You know what I'm saying? So it's all fractal.
Yep. Totally.
Yeah, I'm big on premium and discount. That was also another light bulb thing for me. Just trying to do my best to wait to not short into when we're already in a discount and wait for premium, and vice versa. Only long when we're in a discount. But it depends on the time frame context. You know.
Mm-hmm. Yep. I want to note one thing that I also got taught by a very good trader. And he said, you need to get into the markets and know exactly what you're looking for, that you can live stream to 10,000 people that are telling you to go long and say, nope, I'm shorting here, and take the short, because you know exactly what is going to happen. If you are at the point where you're still like, should I get in this? Should I get in that? And flipping your bias and this, that, you should not be live trading. You should be demo trading until you get to the point where you are so confident that when you see something form, you know to take a short. For example, this wick that we just marked out.
Here, let's go to your chart real quick.
Okay.
There you go.
This little wick that we marked out. A lot of people would be so scared to short here because we're just moving higher, right? We just broke a high. Is that a break of structure? Whoa, are we flipping bias? Nope. I know to short there. I'm taking it. That's what you need to be like in your model. If you are not like that, that means you have not studied your model long enough and you are not ready to be trading your model. You have to be just cold to yourself. You have to be so straight up and blunt and say, I'm not ready to trade. If I can't see my model and go, I know exactly what to do, I'm confident, I'm not touching my stop loss, I know what's exactly going to happen, you're going to take it. And yes, sometimes you're going to lose. But once you have that mentality, your losses are like, you brush them off your shoulder.
Exactly.
I'll use it in a metaphor. It's like if someone comes up to you and says, yo, you're a girl, you're going to look at them and be like, what? I'm not a girl. I'm a guy. What are you talking about? They brush it right off their shoulder because they know it's not true. When you take a loss with your model, you're going to brush it off your shoulder and know that your model still works. And it's okay. My model failed today. Doesn't mean my model's done. Doesn't mean my model's over and it's not going to work. There's our delivery below 10 a.m. low, by the way.
Look at that.
Beautiful.
Perfect.
Right from this wick, this delivery from this wick. And this, all you need to look for is, you can say it's internal range. This could be external, but lower time frame manipulation above a high or into a fair value gap. Anytime price trades into a fair value gap, it's taking a high on the lower time frame because this is a high. So what we did here is we formed the high, took the high, then traded down way lower. It looks like we're going to continue down. We might actually break out of the range and go to the Tuesday. I have a feeling we're going to go to Monday's low today.
I agree. Monday's low is very possible, but like even lower, just low hanging fruit, Tuesday's low makes a lot of sense.
Yeah.
Like you can still find shorts down to Tuesday's low, I think.
Yep. And this 15-minute fair value gap, I think, is just going to draw us down there. But yeah, I still think we're going to move down lower. Majority of the moves bearishly in this tariff war price action has been in the PMs. So
yes, yeah, very true, very true. And I also want to touch on, basically, I just want to elaborate too on what you just talked about, like knowing your model and having faith in your model. Like a lot of people talk about trading psychology and, you're only going to be successful once you have a good psychology, but they don't talk about like, how do you actually get that? It's not from just willing yourself to having good psychology. You're going to have a good mindset and believe in yourself when you have a working system or a working model, right? I think a lot of people, they think like they're forcing themselves to have this will to believe in their trade setup, but they might not be trading a profitable strategy or a profitable model. And you're never going to get the confidence that you're looking for if you can't trust your model statistically, right?
yeah, dude, I was a quarterback in high school, and this might seem off topic, but it's super correlated to trading. Confidence is key in trading. Just like in sports, if I wasn't confident about a throw I could make, I'm not going to make it even if it's the right throw.
Exactly.
If there's a setup that I know is going to work, but I'm not confident in myself to take it, I'm going to miss a good setup just because I wasn't confident. Confidence is key, and that's how you do everything in life. That's how you get good at sports. That's how you make money in trading. That's how you start a business. That's how you make connections in sales. That's even how you get women, man. Like, you need confidence. If you don't take the shot, you don't take shots because you're not confident. And you have to take shots in trading. You have to take risks. Trading is managed risk. That's all it is. So if you're not confident to take your risk on your model, then you just can't trade.
So, all right. So here's a question for you. How did you find confidence in your model? Because there's a lot of people who trade ICT who don't, they can't make a dollar. How did you find confidence in your model?
Well, it's experience, man. You just got to get slapped in the face so many times. And instead of just getting mad about it, you journal it. I've been trading since I was 14 years old. And the stuff I've gone through there, I've pulled out my money saved for school, and I decided I'm not going to go to college. I put it all in trading and lost it all. But guess what? I learned it, and I made 5 times that money back. So it comes from experience. Yeah, comes from experience, man. Like, if you're going to lose, you have to learn. Because if you don't learn from a loss, that's how you actually lose. Losses are lessons, but they're only losses if you don't learn from them.
Yep.
The winner loses more times than the average person even tries. So it's just experience.
Just keep going. Yeah. So you've been trading since 14. So you're younger, right? How old are you?
I'm turning 19 this month.
19. So man, you got started early. That is amazing, bro. So I mean, yeah, you got 5 years under your belt and you're 19 years old.
Yeah, that's crazy.
You have a great future ahead of you in trading, man. I mean, that is insane. I'm 30 now and I've been trading for 4 years. So I can't even imagine if I got started at 19, bro. Like that is insane.
Yeah, a lot of people tell me that. Thank you. But hey, listen, everyone has their own clock. And that's something you have to learn is you go on Twitter and you see people making a lot of money and it can kind of put you in a bad mindset, but everybody has their own clock. Took Jade Cap 10 years to be profitable.
Dude, I was just going to mention him. Yeah, he's been trading 14 years now. He found his success at the 10-year mark. I mean, listen, it doesn't need to be that long, but like you will find it if you just keep going. I always used to tell myself that, especially the first 2 years, because it's weird, right? Your first year of trading, it's not, even though you're failing all the time, it's not, I don't know, it's not that bad because everything is new, right? So everything you do feels like a lesson that you're learning. And there's this like rosy picture for the future for you to look forward to. But then I feel like after that first year, if you can maintain and not quit from a year straight of failing, you go into that 2 and 3 year mark, which that's a really hard time to stick with it, right? Because you know enough, but you still have to just put more experience in to really get to that next step. But the beginning where everything is new and you're learning all this stuff and it's exciting, that part is kind of over, right? So you need to like fight through that next 2 to 3 years. I feel like a lot of people do find profitability around the 3-year mark is pretty common that I've noticed. Even people who are in the Black Shark Club, which is Austin's mentorship, like there's some people who see some success in their first year or two, but they also had great mentorship and they got lucky and found the right stuff immediately. But there's a lot of bullshit in the trading space. You can get straight away from good information very easily. So
Yeah.
if you have all the right stuff, for the most part, I see people in like the 3-year mark really start for it to like materialize, at least begin to.
Dude, there's a lot. I became profitable right at the end of my or the beginning of my 4-year mark. And what people don't say, first of all, look at this injection of liquidity.
I was just going to
after
say,
we took sell side.
Right after we take sell side, exactly.
Yeah, and you know how I knew that this was going to happen? Look at the candles. Look how it slows down.
Slows down after taking liquidity. If you slow down before we take liquidity, it might just be consolidation. But we slow down.
Look here. Expansion slows down for how long? Then turns down, takes liquidity, slows down. Now we could possibly reverse.
Exactly.
So, what was I talking about? What was I talking about before I said look at the?
I'm trying to remember, man. That was an exciting candle. It caught my attention too, bro. That's how you know we're traders, man.
Yeah, literally, dude. I have ADHD, and I think it's the biggest blessing in trading.
For trading, it is, because we're the only kinds of people that could stare at candles for 6 hours, dude.
Literally, dude. Literally, we just hop. We would trade the 1 minute. We can. The best traders have ADHD on the 1 minute, man. Like you can miss everything.
Dude, I've tried. Like I have friends who are like, "Yo, you got to teach me how to trade," and I'm like, "I'm down, man. I'll teach you," but they just don't. They don't have ADHD. They can't sit there and stare at the chart. They can't do it.
Exactly. And I remember what I was talking about. What I was saying is, oh wait, hold on. Look at this reversal here. Look at the injection of liquidity after taking. It's so easy, guys. Like once you get the flow and understand where you're drawing liquidity, it's so easy to predict when price is going to reverse versus when it's retracing versus when it's just taking a form of liquidity and then going to continue down lower.
Yeah. This is really just a perfect example of the concepts in action. So what would you say right now? Like if you, I honestly, like I'm going to stay hands off for the time being until some more price action develops. But if you had to start looking for a trade, what would you be thinking? Would you be thinking for a bigger bounce to take some like internal buy side liquidity, or are you still thinking we go lower and you want to short a pullback?
Well, for me, I need to wait for a macro. So we got 6 minutes until that 5 minutes. But what I would want to look for if we're going to continue up higher, and if this is an actual reversal versus not just a internal range liquidity run, right? Because there's totally long setups in this range that could possibly even go up here.
Yeah.
But again, this is having to drop to a higher time frame. If I was needed to look for a long here, I would want to see a high formed right here and then the high broken. And then I might get into a trade. But this is still too early. This little fair value gap reaction, it's too early because you look here, there's no highs.
Yeah.
Right. So it's just a little dip. And a lot of times this does happen and does turn up higher. Like you can see literally right here it happens. And what do we do right here? We take these equal lows. Exactly. And then it dips and reverses. So it could potentially be like this for here, but it could also be just a drive above this wick and then move down lower. That's why I want to wait for this to get broken again. And then I'll get into a fair value gap trade. For the people who have are more confident and know what they like what they see and they know what they're looking for, that could possibly be an entry. But I'm not the type of guy to trade that fast, and flip my bias that fast. I need a little bit more confirmation.
Yeah, definitely. And I mean, we could be getting ready. Like maybe we get a deeper pullback to rebalance that 5 minute gap that we had marked out before. And that same setup still kind of prevents itself. Sets up.
And dude, this is a lot of short orders that they just whipped out. And the reason why I want to wait for price to get broken again is because that determines the fact on, are we just rapidly taking out buy side liquidity and then moving lower again? Or are we rapidly taking out buy side, retracing, rebalancing, then going back up at higher, breaking this? If that happens, then I'm going to catch the entry. But there's still 50-50 on if we're going to lower again right now.
Yeah, there's not much edge in where we are right now, but things are beginning to develop. And it's important to know the difference.
Yeah. And I wanted to touch back on the topic we were talking about profitability. I got profitable just starting out on my 4th year, but being profitable is really like, that's not the achievement you want. That's not what is hard in trading. It's not hard to get your first payout as much as it seems it is, because you're still in your learning phase. That is not the hard part. The hard part is staying humble and profitable when you're making a lot of money and not be getting greedy. Actually being able to go from $1,000 payouts to $10,000 consistent payouts is really, really hard.
It really is. It really is. A lot of people can get a payout or two. I had the same thing go on when so I got my first payout when I was still trading Forex prop firms. So the CFD prop firms. And I had a great run. So obviously I was like 2.5 years into trading, got one payout. And then for like 6 months straight, I got a payout every 2 weeks. And they were small. Like I was trading 20 and 50K accounts. You know, I'd make $800 payout, $1,000, but it was consistent. And then, when my Forex funds and the whole CFD space kind of just blew up, right? I lost all of my funding because I was only funded with my Forex funds. And that's when I switched to futures. And I thought it was going to be easy, and I had an ego. I wasn't humble anymore because I thought I could do this on any market with any prop firm. It doesn't matter. And now I'm going to scale up. And I went through like 6 months of struggle again, feeling like everything I did getting, you know, that nice little string of payouts was meaningless. And it took a while for me to get back into that flow. And a huge part of it was being humble. What I had to do was tell myself, I still don't know shit, and I need to trade small. Instead, I was trying to trade 3 accounts at once and copy trade. And I was like, I need to go back to 1 account, get a payout with a futures prop firm, use that money to buy more accounts, and just do it all over again, but slowly. And it was really all ego. Ego is a killer for you. And it happens to a lot of people when they get a payout or two. They think like, okay, I've made it. And it's like, really, it's not. It's just begun for you, man. Like the journey has just started.
The ego is a killer. I just want to point out, look at this reaction to the tick of consequent encroachment of that inversion. Touches it. And look at what we're doing now. People are like, oh, we're going to reverse here. But now we have confirmation that we're probably not. And we're going to continue up higher. And again, look at what time's coming up. Well, you can't see because of the camera, but look at what time's coming up. 11:50.
Yep.
So this is going to see what's going to happen in 10 seconds. What's going to happen? It might not happen exactly at 11:50. It might happen at 11:58, but we should see some sort of injection of price.
Ben, do you use the initial balance?
I actually don't really use initial balance. I like to use opening range gap.
Okay, the 15-minute opening range.
Yeah.
Or are you talking about the new day opening gap?
It would be the regular trading hour opening gap. So yeah, new day.
New day opening gap. Okay, got you. Yeah. So here, I'm going to go to my chart real quick. I want to talk to you about the initial balance, because this has been a major. This has been like a huge benefit to my trading. And I have data behind it as well, which is kind of one of those things similar to what we were talking about on just having confidence in your setup and what works. This is really helpful. So I'm going to clean up the rest of this stuff. All right. So this is our initial balance right here. So 9:30 to 10:30 a.m., the range that we put in is your initial balance. So the first hour of New York session. Very simple range, not hard to understand. But there is data that says that for the last 6 months on NASDAQ, we have only broken one side of the initial balance 82% of the time. So on a situation like this, where we did break the downside with a 5-minute closure, for me, it's a lot easier to stick to the short bias at that point. Even if let's say we did get like an afternoon reversal up to take these highs, tap into this gap again or something, I would still be more focused on shorts, for the simple fact that I know there's it's like an 18% chance that we're going to come all the way back up to the IB high. So then I have to tell myself as an ICT trader, well, then what is the objective? Again, what is the narrative or the draw on liquidity? If I just want to go off data, obviously we get double breaks. It's not like this never happens, but it's much lower probability that the draw on liquidity is going to be these highs now, just off that data alone. So I can focus on what the bearish objectives are, taking out this low or taking out Tuesday's low, like we had mapped out. at 19,203. So it's a really helpful, very simple range that I think it's, ICT doesn't teach it, but it just complements everything else I do really well. And another really significant level with the initial balance is just simply the 50% retracement. So that midline, I also like, if we get, one of my favorite setups is when we get a break of one side and then we do get a retracement into a fair value gap or any type of level, and then we've left a clear draw on liquidity to the downside. I like just seeing that 50% of the initial balance as my line in the sand. Like I just don't want to see it get above here. But really simple tool that has data backed for why it works and why you may not want to look for a full-blown reversal after that break forms. You know what I mean?
Yep. No, dude, the initial, what is it called again? The initial balance breakout?
Initial balance. Yeah.
Initial balance. Yeah, that I've heard so much about it. I've seen so much about it. And I think it is worth checking out. I probably will check it out more. It's not really like, for me, my model it's like second nature for me. I've been trading it for so long that like, do I add it? Do I add extra things? It's worth so much. So
dude, it's actually a great thing to talk about too. Like a lot of people constantly want to add new stuff. They want to add new things to their strategy and new technicals. And it's like, I don't know about you. Like once I found what works for me with ICT, that's what I trade. Like it's very simple. Now I will add little things. Like I've added the initial balance about a year ago, and it's not like I just go full force with something, but I just started putting it on my chart, looking at it and going, oh, wow, this is a very relevant range. Like it's really helpful for me. And then I implement it into my strategy. But a lot of people are just, they're strategy hoppers. They look for a new thing. It works for a week or two, and then it stops working for whatever reason, and they move on. They don't give anything like a real chance.
Yeah, dude, that was one thing, is model hopping, bro. It's like the worst thing you can do is find a model, stick to it, and then leave it once it gets a losing streak. Because that is something that delayed my success by so much. And it's just like, dude, why did I do it? Because the model that I use now is not so different than the model I first started out with 4 years ago. It's really no different. It's market structure for value gap. It's like the exact same thing, except now I'm using time. That's it. Yeah. So if I didn't model hop through hundreds of different models, I probably would have been profitable so much longer ago. Like I would have been profitable in my first year, 2 years.
Yeah. Yeah, no, dude, it really messes people up. And it's hard too, because especially when you're new, because let's say you're in your first year or two, like it does make sense to try out a few different strategies, see what works for you, what kind of speaks to you, because everyone's a little different. Like I know a ton of people making good money in ASFX trading VWAP breaks. But it doesn't really matter what the strategy is. But if you're in those first couple of years, there's a balance of trying a few different things to see what's going to work for you. But also, like, once you find it, you got to commit to it. You got to give it a real honest chance, because so many, I know so many people that deal with that. Like, and there's something about when you first find a new strategy, it always works for the first like week or two. I don't know about you. Any like new thing I would try, I'd be like, yo, this is fire. Like this is working every time. And then you have this like honeymoon phase, and then it just, it's just like
exactly what it is. It's a honeymoon phase with your model. Like you're happy that you found it, so you ignore all the red flags about it. And then it comes back later on and just punches you in the face. And it's like, yo, buddy, this is actually not as good as you think it is. And here's what's happening. Like, it's honestly literally called the honeymoon phase of trading. Is when you first find a model, you over exaggerate everything. Look at this reaction. I just want to show you something. If you mind transferring my screen.
Absolutely. Yeah. We got 5 minutes left, so let's see.
What time does price trade into this fair value gap? 11:53. How isn't it weird how throughout the whole stream we were talking, what time did we get that good setup? 11:53 during the macro. Yep. Everything else, this manipulation. Why did this not happen during the macro? Because that's why I don't trade outside of macros, is because, bro, this is likely to happen. I'll enter into a short on this fair value gap fill. We're not in a macro. This could go up and take this high, which is what it did. Enter short on this fair value gap fill. We're in a macro, so we're anticipate to move lower here. So
No,
this
the
is
price
pretty
action
clean.
was so clean today. I mean, everything really lined up perfectly. And before anyone tries to say, "Oh, we didn't take any trades on stream," like both of us took winning trades in the morning. That's the other thing. You don't need to keep forcing yourself to trade just because there's another setup, right? I think you would probably agree with that, Ben.
Yeah, no, totally. Don't force yourself to trade just because there's another setup. If you do one trade a day, then stick to that. I don't do that anymore, but it is like it's so underrated. Is one trade a day?
Yes.
You just get
Yeah,
in
I
and you get
take
out.
a couple trades a day, but I think there's a lot of value in forcing yourself to take one a day if you've been having, if you're still struggling. I think there's a lot of value in that.
Yeah, if you're chasing your losses and stuff, like one trade a day is basically a cheat code to following your risk management model and your model. And if you don't follow your model in the one trade, then that's your fault. You don't have another opportunity. You cut yourself off.
Exactly.
Because when you don't follow your model on your first trade, you're likely not to follow your model on your second one.
All right, so Ben, we're gonna wrap up. If I want anyone who wants to follow Ben, where could they find you? What are you doing with trading lately? Give us some plugs.
So I'm obviously on Twitter, Benjamin _SMC. I'm on YouTube, Benjamin _ICT, and then I'm on Instagram, TikTok, same thing. It's in my link tree. I also run a private Discord group community where I have years of notes of everything you can imagine from every single topic of core content, every single topic and video of ICT 2022 mentorship. I also do my own streaming, so I do my own stuff there. But if you want to find me, you can mainly find me on Twitter. That's where I'm most active, and Instagram. Those two. Reach out to me if you have any questions, and if you want to have a one-on-one call with me, you can book that as well.
Awesome. And yeah, guys, one last thing too. Remember, if you're watching on X and you're not subscribed to ASFX TV, you want to check it out. I'm not the only streamer. We have Austin, we have James, and we have Evan Dyer. So we got 3 guys all streaming. There's one of us on at Market Open Monday through Friday. So a lot of content. We have some courses on there. If you guys want to check it out, you can get 50% off your first month. Use my code ZARB, ZARB. But yeah, man, it was great talking with you, Ben. We got to do it again soon.
Yeah, totally. Thank you for having me on stream, and it was a great session today. A lot of insight.
Absolutely. Yeah. Thank you for coming on. All right, guys, we're going to leave you there. And yeah, we'll be back tomorrow. Have a good one, guys.
Bye-bye.